Regina is the global head of energy for KPMG, and I'm happy to have you here on a day like today where these energy markets continue to get more and more complicated. We saw that prices have eased in the last few days, but do you still see months of turmoil ahead for the energy markets? You know, OPEC and oil is just one component, right? There's a lot going on there right now.
You're right, Paula. There's a number of different factors at play. And I do see a rocky storm for the next several months. I mean, conventional wisdom does not believe that supply and demand truly comes into balance until well into Q2 of next year. And these ups and downs will continue to experience. I'm grateful that we've had a reprieve because WTI was almost at $85 per barrel and now is down at 78. So I think that takes some pressure off the current markets, but I don't think we've seen the worst of it before it gets better because these are very long cycle investments.
Absolutely. And one of the complaints has been that, of course, there hasn't been that investment that there has needed to be. A lot of that has to do with environmental concerns. We were talking earlier that the Biden administration, this is interesting, right? Asked not just themselves to kind of release some stockpiles and reserves, but asked China, India, Japan to do the same in some kind of coordinated effort. What's your read on what that would do to the market?
I think that would be a very positive short-term bump that could help ease the pain that we're experiencing over the next few months, because we do need more supply to come into the system. We also have demand downsides that we're starting to see, you know, restriction of movement around COVID in some parts of the world. So perhaps the demand won't be as frothy. And we're starting to actually see some weather reports that are saying perhaps winter won't be as bad as maybe we were projecting in October. But those are all the different factors that folks are starting to think through. We did have the Gulf of Mexico auction yesterday with $191.7 million in bids and a very strong showing up of a lot of different oil companies. But that'll take a while for all of that investment to basically get invested and come to the market to create crude and natural gas.
And I want to also take a moment to talk about natural gas. You know, earlier we had this decision in Germany to at least press pause on Nord Stream 2. This really brings together so many issues, geopolitical and economic in Europe. And of course, that affects markets around the globe. Do you see the politics of this finally settling so that the markets themselves can get some semblance of what the new normal looks like?
Unfortunately, I don't see the politics themselves going away. And I do think you're exactly right. If the markets could enable more efficient activity, I don't think we would be seeing some of these challenging situations. The Nord Stream 2 decision does mean that we will not have another pipeline for gas coming into the European continent from Russia before the winter. So for sure, it's delayed until March. That means there's going to continue to be strong demand for U.S. LNG cargoes into Europe, into Asia, and it means that LNG will continue to have a lot of buy-side pressure. So, you know, if the weather models are not correct and we have a really severely cold winter across the world, we're gonna continue to see very volatile price spikes.
Yeah, and a good thing to remind everyone right now, too, China is not growing the way it had been before. If demand in China was higher, I can only imagine at what point we'd be in today. Really good to see you to weigh in on all of these markets. Appreciate it.